Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar. Aussie US dollar dragged down by the continued correction in the Chinese stock market. Aussie did not participate in that dollar correction as so many of the other pairs did, namely the euro, the Swiss, the gold market actually had a pretty good rally. So looks like you'll continue to have a bit more weakness in China overall. Aussie getting pretty close to some interesting levels here. You see this is a daily chart, but you see some support levels down here. Let me pan out for a monthly chart, give you scale on that. I think that's where our focus has to be long term. That's a big level down there. Aussie has a lot going on for a very mature retail market. Great demographics. Their demographics are actually even better than the U.S.'s. The U.S. has pretty good demographics as well. So we think long term that's going to be a level to watch in the Aussie for support for a potential sea change move down there, approaching the 70 level. For right now, short term though, short term guys, they're still making hay on the short side. And as a trader, you just want to go along with that. Looks like you're going to get one more leg down into the 70 handle. Next market is the dollar Swiss. We talked about this before I went on vacation. The dollar Swiss was up above the 98 even level. And I said, well, it's trying to break out, but on the other hand, it needs to have the support of the other markets. It did not. Dollar Swiss did not have the support of the other markets. And when you don't have follow through with the other markets, what happens? You had a pretty big correction here. So sizable correction in the dollar Swiss. But what else do we say? We want to stay vigilant for buying dips. So we think you want to keep an eye on this level right here, 93.52 or so. Look for a test of the 94 even level with potential support down around 93.50. That'll be the level to watch for us in the dollar Swiss. Still like the dollar Swiss long term. Pan out to a monthly chart. You'll see why. There it is. You know, you've been pretty much sideways now for a couple of years now. We think that longer term you're going to get a breakout of this bear market that you're still in right now. And what happens is that the bear begets the bull. You get into a new bull market, you got a ton of room on the upside. Short term, we're watching this low. This could be a historic low right here and here that the market puts in a higher low relative to these higher lows, and that potentially a great level to get in for a long-term perspective. That's how we're viewing it. Next market, the dollar index. We pointed this out a couple weeks ago. That double top, you couldn't get through significant resistance there. That two-third resistance held. Look at that, 1, 2, 3, beautiful double top right there. So despite that Swissy trying to break out on its own, you had a double top in the big dog, the dollar index. Market came down, corrected nicely. So, you know, I got to think, though, that similar to the Swissy that you're going to see support coming up in here pretty quick. Here's going to be the level to watch for the dollar index. Right here, right around 95 even. So, you know, the dollar, it's got to hold support in here. So that's definitely a level to watch. So yeah, dollar sitting right on support, just as the euro, the next market, is sitting right on resistance. Let's get to the euro next. Last time we were together, we pointed out the likelihood of a strong short covering rally in the euro, and there you go, there you got it. You know, I was saying longer term, this guy could even see a test of 118. Potentially 120, and here I'll pull out back and I'll show you that. Here you can see that the market took out that resistance, closed above it. Boy, that was a dip to buy short term. Speaking of short term, you know, when we analyze these guys in the weekly report, we always stick to the big picture. Short term, though, we're definitely traders, like most professionals. Here's our performance year to date. Here's our performance in July. You look at, we came in with $33,000 in profit. Our benchmark ended June. We ended up July just below 40,000. So as short-term traders, we're not shy about trading either side of that market. Here you can see you go all the way back to January. That's where we started, essentially unchanged. And you can see month by month we've highlighted the month-end balance, and you can see just nothing but growth. And And that's because we're not shy about playing both sides of the market. And I can tell you right now, August's numbers are pretty stellar as well. We're putting up some nice gains, taking advantage of the short covering rally in the euro. So, as a short term trader, nothing wrong with playing both sides. I think it's essential to play both sides. Longer term, from an investing standpoint, we think it's best to stand back and see the big picture. Big picture in the euro pan out to a monthly. And here's why I say, it could go to 120 or certainly 118. It would be no big deal. Look at the size of that sell-off. So, even a smaller retracement takes it to 120. To us, that's reasonable. So we'll have to see right now. But you're right at resistance. Let me go back to this chart, the dollar index. This is a significant level right here, just below 95. The figure right there. So if you get a couple of closes below that 95, the figure level, then you're probably going to see lower prices still, and then we'd look for a move on 118 for the euro too. So short-term support in the dollar index has to hold in here if you're going to turn this guy back higher. Next market, the gold. Gold really taking advantage of that dollar weakness. Gold's kind of sneaking higher based on the low volume dog days here, dollar correction. And we talked about that. We said all along that gold was sewing in intermediate term bottom. There it is, like a nice little head and shoulders right on 1080. And boy, that was a move that you could have participated in as a short-term trader too. So we were spot on the gold there in calling that intermediate term bottom. And there you go, a nice rally. On the other hand, boom, what does it do? It just takes you right back. It gives you another lower high to take a shot at selling longer term. Here's the level we're looking at. Just below 1180. That'll be a level to watch in the gold market. I always hear from the gold bugs. They like to give it to me because I've been on the short side of this guy for a long time. Here's something for the gold bugs, though. Long term, here's the gold on the monthly, and I'm going to show you that long term primary pattern, which goes back 5 to 8 years or so. It's still bullish. You only got one close below that significant level there. 111 was a big level. You need a couple closes below. You need two closes below. You didn't get it. Hence, you got the nice short covering rally. So, nonetheless, pop back down to a daily chart, and you got a short-term cycle up in the gold. That would have been a nice one to take advantage of. Myself, I was on vacation. Hey, here's a picture of me and the missus on vacation. There we are. That's me and my wife in the mountains of the Rocky Mountains out in Colorado, up above Lake Dillon. Just beautiful. Everywhere you looked, the scenery was amazing. Boy, what a great time we had out there in Colorado. Back now, though. Getting ready for classes in a couple weeks as well. So there's gold, potential sell opportunity at 1180. Of course, you got to watch that. If that euro rally can gain a little bit more traction, then you probably have some more upside. Then potentially you could see a little bit longer term rally here. But overall, the big picture in gold for us is still down, albeit you have pretty good support there between 1080 and 1100 in the gold market. Hey, last market we'll cover will be U.S. interest rates. That's really the talk on the street as far as the Fed not raising rates, and there's the 10-year rate dropping down there pretty good. It got almost to 2%, and what didn't we say? Potentially you're going to see a test at 2% a few weeks ago, and there you go. There you have it. Pretty good support at 2.05. You're into a pretty good band of support here, so I think longer term investors need to consider selling treasuries at these levels, going long yield here, and that's what this chart is telling us, and that's my position here. I have a small position here. I look to add to it once I can break out above 2.5. That's could be a ways away. That'd be a pretty big move from here. On the other hand, if you're not in here, buying a dip in this zone right here, I think is the way to go. So treasuries, the momentum for interest rates is still lower. That's bearish for the U.S. dollar still. On the other hand, you can turn this around quickly given that you're just getting into support level. Hey, thank you so much. It's good to be back, and we'll see you next week.